Welcome to Gold Mine Investing, your one-stop channel dedicated to guiding you through the golden opportunities in the world of gold investing. In our previous presentations, we explored the history of gold, the factors that drive its price, and why it can be a valuable addition to any investment portfolio. Now we're excited to announce a brand new series running in parallel. A how-to series, specifically designed to help you get practical with your golden investments. In each presentation, we'll take a deep dive into topics essential for new investors, from understanding the basics to confidently navigating the more advanced areas of gold investing. Today we're kicking off this how-to series with our first topic, how to buy gold for beginners. If you're new to gold investing, you're in the right place. We'll cover the essential concepts and key considerations to help you make your first gold purchase with confidence. Before you even think about buying gold, you need to understand why you're buying it. See, a lot of people jump into investments without a clear goal in mind. They hear something's hot, or they want to chase returns, but that's a recipe for disaster. Are you looking for a safe haven asset that holds its value during economic uncertainty? Is it a hedge against inflation you're after? Or maybe you're just looking to diversify your portfolio and gold seems like a good option. Your why is crucial, because it dictates everything from the type of gold investment you choose to how long you plan on holding it. For example, if you're worried about a stock market crash, physical gold might be your go-to. But if you're looking for long-term growth potential, gold mining stocks could be a better fit. Don't underestimate the power of defining your investment goals right from the start. Now let's talk about the different ways you can actually buy gold. Because here's the thing, buying gold isn't a one-size-fits-all kind of deal. You've got options, and each one comes with its own set of advantages and disadvantages. First up, we've got physical gold. This is what most people think of when they hear gold investing, shiny gold bars and coins. Holding physical gold just hits different. You know, it's tangible, it's private, and it gives you a sense of control over your investment. Then, there are gold ETFs or exchange-traded funds. These are like baskets of gold-related assets that you can buy and sell on the stock market. ETFs offer a convenient way to invest in gold without having to worry about storing or insuring physical bullion. Next, we have gold mining stocks. These are shares in companies that mine, explore for, or produce gold. Investing in gold mining can be a bit more volatile than other options, but it also comes with the potential for higher returns. And finally, we have gold futures. Now, futures are a bit more complex and generally not recommended for beginners. They are contracts to buy or sell gold at a predetermined price and date in the future. Futures are more about speculation and can be pretty risky. Okay, so you know you're buying gold, and you've got an idea of the type of gold investment you want to make. Now let's talk about how much money you're actually going to put into this. Just like any investment, you need to set a budget for your gold purchases. Don't just blindly throw money at gold because you think it's a sure thing. Trust me, no investment is ever a sure thing. When setting your budget, remember that gold prices can be volatile. They go up, they go down. It's the name of the game, so don't invest money that you can't afford to lose. And here's something a lot of newbies overlook: the costs associated with buying and owning gold. See, the price of gold itself is just one part of the equation. If you're buying physical gold, you're going to have additional expenses like storage fees and insurance. You can't just keep a gold bar under your mattress, right? You need a secure place to store it, and that costs money. And then there are potential markups and commissions when you buy or sell your gold. Dealers got to make money too, right? So factor all of those costs into your budget. Now, this is where it gets really important, especially if you're buying physical gold. Finding a reputable dealer, because, unfortunately, the gold industry attracts its fair share of shady characters and scams. If you're buying physical gold, you want to deal with a reputable dealer that has a proven track record. Look for dealers who are accredited by recognized organizations like the Better Business Bureau or the American Numismatic Association. Don't be afraid to shop around and compare prices from different dealers before making a purchase. A few bucks difference in price per ounce can really add up, especially if you're buying a significant amount. And here's a big one to be wary of: dealers who pressure you into buying or who make promises of guaranteed returns. Remember, if it sounds too good to be true, it probably is. If you're going the online route with ETFs or mining stocks, make sure you're using a reputable brokerage platform. Look for platforms that are regulated by the SEC and FINRA, and read reviews from other investors. See what their experiences have been like with the platform, their customer service, and any fees they incurred. Okay, so you've got your why, your gold investment type, you've set a budget, and you found a trustworthy dealer or platform. Now it's time to learn how to track gold prices so you can make informed buying decisions. Gold prices fluctuate constantly throughout the day. Think of it like the stock market, but for shiny metals. Factors like supply and demand, global events, even currency fluctuations can impact the price of gold. Luckily, there are tons of websites and financial news sources where you can easily track gold prices in real time. You can set up price alerts to notify you when gold hits a certain price point that you're interested in buying at, but here's the thing, don't just look at the current price of gold in isolation. You need to understand the historical trends, look at gold price charts over the past few years, even decades to get a sense of how it's performing over time, and pay attention to the news. Major global events like economic recessions or geopolitical instability can cause the price of gold to spike. By staying informed, you can anticipate these price movements and potentially capitalize on them. All right. For those of you who are diving into the world of physical gold, there's a whole other layer of knowledge you need to acquire. Understanding gold purity and weights. See, not all gold is created equal. The purity of gold is measured in carats, with 24 karat being the purest form. But you'll rarely find pure 24 karat gold in coins or bars as it's too soft and easily scratched. Most gold coins and bars are actually alloys, meaning they're mixed with other metals to make them more durable. For example, a 22 karat gold coin contains 22 parts gold and 2 parts other metals. The weight of gold is typically measured in troy ounces, which is slightly heavier than a standard ounce. When you're comparing gold prices, make sure you're comparing apples to apples. And here's a pro tip. Be aware of numismatic value. Some gold coins, especially rare or historical ones, can carry a numismatic value that's significantly higher than their melt value. Melt value is simply the value of the gold content itself, so if you're buying gold purely for investment purposes, stick with bullion coins or bars, which are valued primarily based on their gold content. But if you're a collector at heart, then exploring numismatic coins could be a fun and potentially profitable avenue. So you've done it. You've taken the plunge and bought your first piece of gold. Now you need to figure out how you're going to keep it safe because let's be real. Having a chunk of gold just lying around your house is like painting a giant target on your back. The first option is to store your gold at home. This is the most convenient option, but it's also the riskiest. If you're going to store gold at home, you need to invest in a high-quality safe that's bolted to the floor, and even then, your homeowner's insurance might not cover the full value of the gold if it's stolen. Another option is to use a bank-safe deposit box. This offers a higher level of security than storing gold at home, but it also comes with its own set of drawbacks. First of all, it costs money to rent a safe deposit box, and second, you won't have access to your gold during bank holidays or outside of banking hours. The third option, and the one I personally prefer, is to use a professional, third-party vault storage facility. These facilities are specifically designed for storing precious metals and other valuables. They offer state-of-the-art security features, insurance coverage, and you can usually access your gold whenever you need it. No matter which storage option you choose, make sure you do your research, compare prices, and read reviews from other customers. This presentation is just the beginning of our how-to series, designed to make gold investing clear, accessible, and practical for beginners. From learning how to buy gold, to understanding how to diversify and secure your investments, we'll be covering everything you need to know. So, are you ready to take these first steps on your gold investing journey? Join us here at Goldmine Investing, where we're dedicated to guiding you through every step with insights and support. Subscribe to Goldmine Investing and don't miss our next presentation in the series, where we'll dive even deeper into the world of gold investing, covering essential topics to build your confidence as an investor.